Amrita Sen, Energy Aspects founder and director of research. I saw something earlier, too, that fossil fuel contribution to the global energy, which is going to rise 1% energy usage this year, stuck at 82%. All the renewable progress that we're trying to make has not moved the needle one iota versus what the fossil fuel at 82%. And now we hear this. We better keep drilling, Amrita.
Yeah, and I think this is the biggest challenge we have, right? Just the lack of education among people who keep talking about oil demand is or already has peaked or is about to peak. The reality is when you have emerging market nations growing, just generally, oil and energy demand is synonymous with economic growth. And sure, we can talk about not requiring any fossil fuel demand, but then we are going to have to accept that economic growth is not going to happen as well. And I think the percentage you talk about there is so crucial. You know, that percentage hasn't changed since the 1980s. Back in 1980s, fossil fuel used to be 82% of total primary energy consumption. Today, that percentage is pretty much exactly the same. Of course, new growth is being met by renewables, and of course, we're going to continue to see that. But to just write or rule out oil fully, it's a huge mistake, and that's the problem we are seeing, just not enough investment because people keep talking about peak oil demand.
Can you connect any dots between the developments in Russia over the weekend and where you think oil should be headed? We got a big 0.5% move higher to still below $70 a barrel, even with all the all the developments.
Yeah, I mean, look, what has been this has been a very interesting market, right? Because we've seen paper balances being very strong, and since the start of the year, demand has actually come in higher than expectations. Every trader we speak to is kind of struggling with the same issue, that balances do suggest very strong stock draws, but the market isn't pricing like that. Part of the story which we've been talking about is the destocking. Because of higher interest rates, everybody is getting rid of inventories very quickly. The question now becomes, with geopolitical or risks, even though there is no outage and we're not expecting an outage from Russia, but the risks are rising, does it mean then maybe refineries back off from destocking and you get a bit more, security of supply concerns and people actually start to buy again? We are confident that we're going to get those stock draws. We are starting to see them already. And I do think prices will head higher. But the destocking plus the Brent contract change is really murking waters this year.
Where's you mentioned demand and you mentioned destocking, but where's the real supply worries? Why do the Saudis even feel that we're just flush with oil right now? Where is it really coming from, Amrita?
We've had the U.S. grow somewhat, again, well within expectations. We've had some growth from kind of, say, Guyana and Canada. But the place where we've seen more than expected supply has actually been Iran. We've raised our production forecast for Iran from pretty much Q2 onwards for the rest of the year. That has reduced our stock draws profile for the rest, for the second half in particular. But that is very much, again, the U.S. has been trying to ease tensions and unofficially allowing them to export more. And the big thing has really been China has been hoovering up a lot of that Iranian oil, which is what's allowed Iran to pick up supplies. But even regardless of this, the reason Saudi Arabia has cut production and OPEC Plus are doing what they're doing, for them is much more a demand worry rather than a supply worry. I do want to clarify that. They are worried about a Western recession, what central banks are doing there. But yeah, Iran's really changed the balances for us the most.